Hello, very warm welcome. You're watching Your Trades on 80 now. I'm Priyanka Uppal, along with me is Shreyansi. Markets clearly flipped off today. Macro reasons looks to be the big reason for weighing on the markets, but Nifty has been dragging down ever since it opened, though it opened in green, but then since then the market has been dragging down and there was no sign of pullback throughout the day. Bank Nifty, the banking stocks were the main culprits. Both the heavyweights, HDFC Bank, ICICI Bank, and not just the heavyweights. In fact, the entire PSU bank basket and the private sector banks also were weighing on the markets, and that's the top losers also. Bond yields, however, have softened. Should have been a positive day for the banks, but then it didn't help the banks stem the losses. Clearly, broader markets also looked weak today. Small cap was lower by 2% again. Tata Group stocks from across mid-cap, small-cap, they bleeded badly. Tata Chemicals more than 10% shedding. Tata Consumer shedded another 3%. Metal stocks slided today. Iron ore future trading on Singapore did give another weakening set of sign. But then looks like that we are looking for more macro cues to take direction from here. US CPI is awaited on Tuesday evening. That is, we react on Wednesday. Though the strong jobs report gives us a mixed signal, but then market clearly looks for a direction there. China inflation figure, ECP inflation revision, all these factors needs to be looked on. But then which were the big stories today? Clearly, markets being the top story. The second big story is Supreme Court dismisses SBI's electoral bond plea. Supreme Court requested for more time to disclose details of the electoral bond scheme here. And this was few of the top stories. But then what do you have, Shreyansi? Tata Sons clearly and the Tata stocks were the big news makers on the downside.
Absolutely, and the kind of moves that you've seen on those stocks, right? So if you look at even with Tata Chemicals, you're looking at a slide coming in of about 11%, and now sources say that Tata Sons may be looking at a restructuring plan to align with RBI rules to avoid an IPO. Now remember, the slide that we see coming in today was after that run-up that we saw last week on the buzz of an IPO by the parent. So this is, of course, an important flip-flop coming in when you look at Tata Sons and Tata companies and that entire pack, to be honest. Now, the government is gearing up for a big announcement for guaranteed treatment of road accident victims, and that's another important story that we are tracking. Now, sources say that the government may soon announce a scheme for guarantee of golden hour treatment in which cost will be borne by insurance companies. So that is an important story. And then, of course, in the primary market space, you do have Crystal Integrated Services IPO. The price band has been fixed in the range of 680 to 715 per equity share. And that particular, the date of subscription, of course, is on March 14th and it will be closing on March 18th. So do keep an eye on that particular IPO as well.
Some of the top news, but then let's go ahead and understand that how are the technicals shaping up at this moment. We have a senior technical analyst from Arihant Capital Markets, Mileen Vasudeo. Mileen, very warm welcome. You're watching Your Trades. What a flip on the day today. Though data was suggesting a positive day, but then the way Nifty struggled to keep itself above 22,400 gives us what kind of signals now? Though we have been able to close above 22,300. Do this looks like a pullback can be awaited? What do you make of the markets right now?
Good afternoon. See, clearly Nifty is in an uptrend, and now we have seen some reaction at higher levels because markets are circumspect at higher levels. But yes, Nifty has got good support somewhere around, 22,280 levels, which is the 10-day moving average line. Now, if you see the markets are still trading well above the short-term moving average line. 10-day moving average is somewhere around 22,290 levels, and 20-day moving average is at 22,168. So overall, we are still trading well above the rising 10 and 20-day moving average line. So we are of the opinion that in tomorrow's trading session, yes, there is a good support at somewhere around 22,280 and 22,250 level, from where we could see some kind of a reversal. We are not very bearish on the market. Similarly, if you see that the breadth of the market has remained negative for last two consecutive trading sessions. This clearly reflects that there is some selling pressure in the mid-cap counters. But yes, large-cap counters, mainly in FMCG, they are looking good. and we could see some kind of a reversal at a lower level. Similarly, even Bank Nifty, if you see, Bank Nifty is also trading at 47,464 levels. Good support somewhere around, say, 4700, 47,400 level and 47,350 levels. So in tomorrow's trading session, definitely some kind of a reversal in the latter half of the session could be seen, and we are still positive, and we expect that Nifty and Bank Nifty to perform on the higher side.
Right, so trading above short-term averages is the word coming in from you, but which are the stocks that you see, that have value according to you? Do you see something from the consumption space that, appears nice to you at this point?
See, there are two stocks which are clearly showing strength in the market. One was in the later half of the session, we saw good buying in Nestle India happening. Currently trading at 2612, which I saw last time. And one can keep a stop loss of 2570, and the target would be 2690 and 2730 level. The second stock was RAC, currently trading at 484. Stop loss should be 470. Target would be 508 and 518 in couple of days' time.
All right, thanks very much, Mileen. Though we heard that you said that you're not that bearish on the markets, and hence you have given us the buy calls also. Thanks very much for these inputs. Let's go ahead. There was an important word coming in from the SEBI chairperson today, Madhumi Puri Butch, on SME IPO disclosures. She mentions the market watchdog is working on disclosures and ensure better surveillance mechanism. Let's listen in.
Some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for SEBI to underline that in terms of disclosures to the investors. The second is in terms of actual price manipulation, both at the IPO level and at the trading level. We are working to evidence that we do see the signs. As I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns. I would say it's still on the kitchen table. It's not yet gone into the oven. That when we issue a public consultation paper is when it enters the oven. But right now it's still on the kitchen table. We're still working with, advisors to try and understand the dimensions, the data, analyze the data. So still at a relatively early stage.
All right, time for a quick break then. But when we come back, we'll take a look at how the derivative space is shaping up for us.
Welcome back. You're watching Your Trades, and now let's get you more data on the derivative side. Clearly, the trend on Nifty looked like it was a short built-up trend. Bank Nifty also short built-up trend. In fact, the range looks really small. It's a small, narrow range only, but then the call writing, the active strikes where the maximum of the call writing happened at 22,400, 22,500, and now 22,500 also happens to be the immediate resistance level also. But then market can find support, and in fact that's what we saw also, that 22,300 was protected because there's the put buying also happening, the maximum open interest at 22,200 and 22,300. Clearly Nifty though very interestingly, Shansi, in fact if you notice, market opened at a record high only, not the record level, but we failed to maintain those levels and we slipped it and there was no sign of pullback.
Yeah, absolutely. It is very interesting what is happening. But another space that is very interesting at this point and is also our big story of the day without a doubt, it has to be Tata Group stocks that could be in focus after sources say that Tata Sons may be looking at a restructuring plan to align with RBI rules to avoid an IPO. Remember, the stocks ran up last week on the buzz of an IPO by the parent. What does the latest development mean now? Somit has the answer to that question. Somit?
Well, if you see, Tata Group stocks remained in focus in the last week. They have added around 89,000 crore rupees in the market value. The stocks that have added the most include the list of Tata Motors, which has added close to 22,500 crore rupees, and this is largely in the back of the demerger rally that we had seen. Then there is Tata Power, which added close to 15,300. Tata Investment and Tata Steel added anywhere between 9,000 to 11,000 crore rupees, while Tata Chemical added close to 8,800 crore rupees. Now, though in absolute terms, Tata Chemical might have added just 8,800 crore rupees, but in percentage terms, if you see, Tata Chemical share prices rose the most among the Tata Group companies last week. The share prices jumped nearly 36% last week, and this is the biggest weekly jump in the share prices of Tata Chemical that we have seen since May 1992. Back then, the share prices had increased around 47 odd percent. Currently, the stock is at record high. Now, what triggered this rally when it comes to Tata Chemical? Well, it's the news about the Tata Sons IPO, which is expected to hit the markets anytime in the next one and a half year. Now, Tata Chemical owns nearly 3% stake in Tata Sons, and this IPO could lead to value discovery of its stake in Tata Sons. Now, Tata Sons, as per analysts, is valued at around 17 to 17.5 lakh crore rupees, but given the fact that it's a holding company, there will be a holding company discount. Now, if the holding company discount stands at around 30%, then Tata Sons' actual value on listing could be around 12.3 lakh crore rupees, while if the holding company discount stands at around 60 odd percent, then the value could be around 7 lakh crore rupees. Now, this means that Tata Chemicals' 3% stake in Tata Sons could be anywhere between 21,000 crore rupees to 37,000 crore rupees. Now, this means that the 21,000 crore rupees value of its stake in Tata Sons is nearly 63% of its total market capitalization, and hence we had seen this rally. Now, if the holding company discount is on the lower side at around 30 odd percent, then the actual value of its stake could be much more than the current market capitalization of Tata Chemical. But it remains to be seen whether Tata Sons IPO will hit the market or not, because what we understand is that RBI has declined the request of Tata Sons to give them an exemption from this IPO, but Tata Sons is considering various options which include corporate restructuring and also restructuring its liabilities to get a relaxation under RBI rules. So whether or not Tata Sons IPO hits the market or not, that will decide the rally in the share prices of Tata Chemical going forward.
Thanks very much, Somit. Hence the big moves we saw in Tata Chemical stock prices on both the sides, either on the gaining side last week, where the stock gained more than 40% on this news only, and now after this current update, the stock has also hammered more than 10% today. But another Tata Group company, which is an interesting update coming in from Tata Consumer Products CEO Sunil D'Souza, which happens to be the guest editor for the day for ET Now, who says that double-digit growth ex-beverage salt is very much possible, says MD and CEO Tata Consumer Products Sunil D'Souza. He also shares growth guidance for the segments and how acquisition synergies will aid in driving this growth. Let's listen to him.
Beverages and salt, we've always said probably 5% volume, 7% value growth. But we've always said double-digit top-line growth. So for that to happen, it is the rest of the portfolio which has to fire. Earlier we said 20% of our portfolio we defined as growth will grow at 30. Now with the acquisitions, we said 30% of the portfolio will grow at 30. Food absolutely is the far bigger playing field, and that's where we will go after aggressively. The entire ready-to-drink beverage space, we've grown what, 5 times in 4 years? The entire breakfast, mini meals, cereals, snacking did not exist in Tata Consumer earlier. We've created that entire vertical, partly organically, but partly also through acquisition of Soulful and now Ching Secret. And most importantly, the future categories also. We are not only building for today, we're building for tomorrow. Organic India is, the acquisition is positioned for tomorrow. I mean, whether it is organic or Ayurveda, they play it at the confluence of both. And as per capita income grows, health, wellness, nutrition, that's going to play off, right? Convenience. So, turmeric capsule or organic psyllium, I think that is poised for growth.
Well, that of course was the word coming in from Sunil D'Souza, who was donning the guest editor's hat today on the channel. But moving on then, let's take a look at which are the stocks that were in news today. Gaurav joins us with that list. Gaurav?
Yes, JM Financials is a company which is definitely going to be in focus because the stock was down almost 9%, and this is after SEBI, which has barred the company from managing new public issues in the debt securities because SEBI found some serious lapses where JM Financial acted as a lead manager. from here on, SEBI has allowed the company to take any kind of position as a lead manager in the debt services for the next 60 days because of the existing mandate. But overall, the sentiments were negative for the stock, and that is why we saw the stock was down almost 9% in today's trade. Let's also look at Zomato, because now reports suggest that Flipkart is gearing up to relaunch its operations in the quick commerce segment. After that, we have also seen reports where Zepto has launched its new subscription plan to get some traction in the quick commerce segment, and this is going to be an increase in the competition for Zomato's Blinkit segment, and that is why we saw the stock was down almost 3%. But let's not forget that brokerages are being a little bullish, and with this, I mean, for example, Morgan Stanley has now maintained overweight rating and a target price of 180 rupees because they believe that this entry of the new competition validates the quick commerce segment is managing very well. Let's also look at GMDC and NMDC, because both the stocks were down in trade today, and this is because the global iron ore prices have declined almost by 5% because the inventory levels in China, the steel inventory levels, are still piling up, and that is why we saw both of these major miners losing in trade today, and both the stocks are down almost more than 2%. Let's also keep an eye on SBI, because now Supreme Court has rejected a plea of the bank to seek the time till 30th June to disclose the electoral bond details. Now SEBI has ordered the SBI to share details by tomorrow, and with this we saw the stock was down almost 3%, and at the same time we also saw brokerages like Bernstein downgrading the rating for the stock to market perform while increasing the target price to 780 rupees because they believe that there is limited upside for SBI from here on. So all in all, we will also keep an eye on all these stocks from here on, and let's see how these stocks performs in tomorrow's trade as well.
Thanks very much, Gaurav, for compiling the entire list for us. That's all in this edition of Your Trades. Thanks for watching. Stay tuned to ET Now.